We've been seeing really strong new listing volumes in places like Sydney and Melbourne for more than 12 months now, but some of the biggest increases were in those other capital cities. So places like Perth, we still saw a large increase in both Sydney and Melbourne, but even places like Brisbane and Adelaide, we're starting to see quite a lift in new listings relative to 12 months ago. So vendors are clearly more prepared to put their properties on the market now than they have been.
What's prompting vendors to enter the market?
I think there's a few things. Firstly, people were expecting interest rate cuts this year. They're now looking more likely to happen next year. And perhaps people were holding out hope for those cuts and now realise they can't continue to hold out any longer. I think also people have seen significant increases in the value of properties over recent years. They're using that equity to upgrade. You know, they've put off putting their properties on the market as long as they possibly can, and they now need to upgrade. I think the other one is we're starting to see more availability of stock in the rental market, and we know that a lot of people have to sell their property first before they purchase. So the fact that there's a little bit more of an ability to do that is probably encouraging some people to put their properties on the market as well.
Nationally, prices have been increasing, but at a slower pace. What impact will the increasing number of listings have on prices?
I expect that we're going to continue to see the rate of price growth slow. If you look at somewhere like Melbourne, prices are down about 1.5% over the past year. We've seen a big increase in both new and the total number of properties on the market. And I think we're assuming that we continue to see this heightened level of new listings and total listings increasing. I think that will contribute to a slowdown in price growth. But you know, prices are still rising very rapidly in places like Perth, Adelaide and Brisbane. They've got a long way to go to get to more sustainable rates of price growth.
Hobart, Adelaide and regional areas of New South Wales, Queensland and Tasmania have seen a double-digit increase in month-on-month listings. But it sounds as though you believe it's far too early to say that it is a buyer's market in some areas.
I think in somewhere like Melbourne, for example, it's definitely a buyer's market at the moment, and I think Sydney's transitioning to a buyer's market. The month-on-month changes are more reflective of the fact that we've come into the spring selling season. So year-on-year is probably more reflective of conditions. But what I would say is I think the market is transitioning for one that overwhelmingly favoured sellers over the last few years to one that's more balanced in places like Perth, Brisbane, Adelaide and some of those regional markets, and probably swinging more in favour of buyers, certainly in Melbourne, but also that's starting to happen in Sydney as well.
A lower number of listings are being offered at auction. Does more choice also provide more time for buyers to make a decision?
It certainly does. We're seeing that properties are sitting on the market for a little bit longer. You know, good quality stock is still moving fairly quickly, but when you have more stock coming to the market and more stock on the market, it takes that urgency out of buying. If you think about conditions where there's not a lot for sale and there's not a lot coming up for sale, if something is listed for sale that's, you know, even halfway decent for what you need, buyers will jump at those because the sense is there might not be another appropriate property that comes onto the market for another 6 or 12 months, and prices could be 15, 20% higher. Now I think there's a level of comfort that there's a bit to choose from. If I don't get this property, something else will come onto the market in the not too distant future, and hey, it might be better and it might be cheaper.
The Reserve Bank has said it doesn't believe the data supports a rate cut before the end of this year. When it eventually comes, do you expect the first cut will provide some more momentum for price growth to take off again?
I think it's a really interesting question because obviously as interest rates come down, some people that are struggling to make repayments will be able to reduce their repayments. So it might mean that people can hold on to their properties. The other thing it will do for potential buyers though is increase borrowing capacity. I don't know that it's going to sort of be instantaneous that we start to see a recovery in the market, but I think as interest rates fall in 2025, we will start to see that price growth lifting again. In places like Melbourne, it's going to be very dependent on the amount of stock on the market moderating. But generally speaking, I think lower interest rates will drive more demand for housing.
Cameron Kusher, great to speak to you.
Thank you.